Hey, my people, wanna welcome you for another episode for Business Korna. Yes, na Business Korna, but today na some different version of Business Korna. Not only for business people or personal interest there for this particular topic today, because this one we'll call a personal business corner because they deal with some important topic inside, especially when I would inside America. When I hear the topic, when I go understand why we call them personal business corner. So one thing there for America will be guaranteed. You must pay taxes. And before I get into the conversation and the topic we introduce Antuna, make us start by introducing to my right with special guest today where he can address this particular topic. Welcome.
Good evening, my people. My name is Stephen Ogunsusi, and I come from the CPA firm called Stephen and Associates CPA PC. We're day-based for Washington, D.C. Thank you, my people.
All right, Stephen say he come from the CPA firm, na accounting firm. So in a weti what they call chartered accountant, for you they call them CPA. So you just give the abbreviation. So Stephen today go come for address. We questions them, and the topic today na taxes, business and personal taxes. So we bring Stephen, accountant Stephen from Stephen and Associates, may answer all questions. And also even when they look me deep inside my eye, una be glad now because this particular topic, we come toward the end of the year now, the time the way they gather every document for to do that way they call it tax filing. So una take chair, una take whatever una go for do, drag them, shidong, fix una self in front of this camera, look me like I look una, then una will get every answer for questions. Una questions them from Stephen. So make we start right away, right?
Yes, sir.
For inside this America, how did they collect taxes?
Oh, good question. Thank you for that question, Dr. Ernest. So we get two levels where we say then they collect taxes. And generally now the government get to collect taxes. So when I say two levels, that means say the federal government, which is collects taxes, and the federal government tax collection is administered by an agency called the IRS, while each state also can they get in your own tax collection administrator, which normally each state they call the state controller's office or the state division of treasury. So those are the two levels of taxes. Okay. And when I say the two levels of taxes, furthermore, so waiting say at the federal level, the federal government they collect something where then they call income taxes. We say on every income where every person where they work for this America they earn, government they charge something where then they call federal income taxes. We say then go withhold from every person paycheck. Now after that, then can get something where then they call FICA taxes. So the FICA taxes they in two places. You get one part where they call Social Security, and the other part now Medicare. So both of them together then they equal to 7.65%. One now 6.2%. While the other one now 1.45%, maybe say IRS they charge on people federal income. While now as any person where they work for this America then they also withhold. So now if you remember I talked to then they withhold federal taxes, that one. Then the second part now FICA taxes. Now as then they withhold the FICA taxes from employee pay. Now you where they work as an individual. That FICA taxes where then they withhold that where then they charge at 7.65% on your income. The employer self go come pay another 7.65% as well. So that come mean say both then go from your paycheck, government go federal government go first withhold federal taxes, then go withhold Medicare taxes, and employer go come pay the same FICA taxes, which is Medicare plus Social Security. Then after that, and going to get something that they call payroll taxes. We say, those are the FICA. Now, at the state level, so state government self, they charge what we call state income taxes, but that one they at a slightly lower tax rate than the federal. Now, besides the states have also come to generate taxes in different ways too. Like we get something we call excise taxes. Then they charge property taxes. Like if you say you get a house, you go to pay property taxes every year. We say your state go to send you bill. website and go they deduct out of your mortgage payment. You know, we get like excise taxes. We also get business property taxes. Website, even if you register any business for any state, website you go they pay personal property taxes. So they then get different ways where then they take the collect taxes.
So you don't talk say you start now by say employer go pay,
Yes.
employer go pay.
Yes.
This one you did talk now people then where they be employer employee. How
Yes.
about person where me I be personal business person, right?
Yes.
Are they what they call contractor?
Yes.
Okay. They my employer need to take no money from my check.
Yes.
So how I would pay that FICA, I would pay that FATU, or those withholding them for Medicare and Social Security. How it do work?
Very good question, Dr. Ernest. So the way that one they work, we say, you know, say if you be 10-9, so waiting, Dr. Ernest, they talk here, that employee, that individual, where they then they pay on 1099. Upfront, an employer no they take any taxes from the income. But at the end of the year, the moment an employer give them in Form 1099, when he give that Form 1099 to in tax preparer, like let's say like Stephen and Associates now, that Form 1099 automatically they generate something what they call Schedule C. So that Schedule C is like a mini business tax return.
Okay.
And it's intertwined with a regular Form 1040.
You talk big talk, it is intertwined. What you tell with people that's made to understand it's intertwined. What is that?
Meaning say the Form 1099, they generate Schedule C, and that Schedule C go flow.
It go connect.
It go connect into your main Form 1040 tax return.
Okay.
So on that Schedule C, it gets something we call self-employment tax. Now that self-employment tax, now you go capture all those taxes we on are never paid during the year.
Okay.
Now, make I can't tell you the good thing where government do. They can't they give you half as a deduction. But on the flip side, what can happen on that self-employment tax? It can't be taxed at a higher tax rate than if you were an employee. And you sabi the logic where they behind and why then they tax them at a higher tax rate. Because if to say you be employee, as you they make money, like say you make money, you work January 1st through January 15th. The moment your employer, they pay you, then they take taxes, they send them to IRS immediately. But when you do on 1099, you know they pay taxes on that money until the next year when you file your tax return. That's why then they charge a little penalty. Not necessarily, they're not going to call them penalty, but it is charged at a slightly higher tax rate than if to say you be employee, we say upfront, where then they come out that money from you.
All right. So what you're talking about, say at the end of the day, at the end of the year, the independent contractor, the 1099 person, when you fire, they will still get all that withholding for you.
Yes.
But at a slightly higher rate, because just imagine person where employer did move that money, they pay every 3 months, every 3 months.
Every 2 weeks.
Every two weeks. But this one, you can't pay not only at the end of the year. So if government need that money every 2 weeks, the money no day, then we'll say, you know what, hold that money, but when we want to take them from you, we'll take out small interest, quote unquote, will not be interest, not just at a higher rate.
Yes.
Okay, so now we don't talk to the two systems, one a state, one a federal government.
Yes, sir.
So federal government, they take them through your employer or you file those things.
Yes.
Then state take them, how state collect their own taxes?
Very good question. So the state, too, just like the way the federal government gets its own income tax withheld on the federal tax side, the state self, they get the state income tax withheld too. And most people, if you look on your Form W2, you go see them in box 17. That at the place. So the moment the same way where the federal government they take commot money before they pay you as an employee, states they follow the same. And just for one concept, now say most things where the IRS they do, the states they always they follow.
Okay.
Yes, that are just the general.
So now you answer the question I want to ask you. Those two systems they be connected, IRS and state. Very
connected. As a matter of fact, IRS be like senior brother, while the states be like junior brother. Because basically, for me, for my experience just working with taxes, one thing I observed is say most things where the IRS don't take the time to put in place, most states just replicate them. Except with the exception of a few states where you go just like deviate a little bit. And for you to even know, say both systems they talk. If like say the audit person now, if to say IRS audit somebody within 3 weeks to like a month, like let's say maybe somebody while I did on in tax return, website IRS send them audit notice for January 1st. By the time you go see some like January 31st or like first week of February, states have go don't send you because IRS then go don't trigger state, say, okay, voila, deal. So yeah, then they communicate. And even also to let you know, for the most part, like I said, most states then they copy the IRS. So because the IRS don't already put all these things in place. So waiting the
right. So what is Stephen Itogna say, once IRS get information, whether or how or we don't know, it go tell we better that they connect with state. So that idea or the thought, say you fish make money, then you hide some part for state, or you tell IRS, once IRS knows say you make now 10 million, you pay this amount of taxes, then you go on the report that amount for state. State must know because IRS and state, they talk, right?
Yes, sir.
So you know if you hide one.
No, you're not.
Okay. So we'll come for some other thing where now with the same for television. I want to answer this question for people them. But before I ask you the question, my people them, an important topic, but I want me to continue for follow with for all social media platforms we do all on YouTube, TikTok, Facebook, Instagram, which one were another name of X? They used to call on Twitter. I think they still call on X or something like that, right? So we did it. So the question I want to ask you, because if you go for television now, you get plenty. In fact, they even send we letter for inside your mail. So where, especially those of you away, when IRS, you owe IRS, for one reason or the other, people they didn't know. These audit firms, I don't know how they understand, they didn't know. Then you start get letters, say, oh, IRS forgive. My way you receive letter where you say IRS forgiveness program, if we help you, it means you owe taxes. No question, no day about that one. They know how person will owe. That program, the work now, true say some IRS forgiveness program there.
Very good question. Yes, it's true. IRS forgiveness program there, and even they in different levels. But the main one, where we say they help people. Now something where they call OIC, which is offer in compromise. And waiting offer in compromise be generally now say you owe the IRS money, but you won't try make the IRS understand. Say yes, you agree, say you owe them money, but now some things don't happen to you. Where we generally they call like hardship or like extenuating circumstances. Maybe say if those kind of things can't hit you, then we go come package the application for you, come send them, give the IRS. In other words, waiting with the try to use that package and say we won't negotiate with the IRS. Say yes, this person knows say he owe you maybe $1 million, but because in don't enter yawa. You get wahala now. Maybe you don't, like I get one client where been get cancer, and then at the time where we go submitting offer in compromise. So what happen be say when that kind of application reach them, we have to establish certain things. And waiting with the try do now to negotiate on behalf of that person to let the IRS know say this person no go fit pay you the full 1 million where he owe you originally. Say how on a fee work with us. We be say we go just present
Steven,
a certain amount.
I want to make we really focus on the issue, not be how enough you work.
Yes.
I want to explain to people them, right?
Yes.
Now, which conditions them? And not that I say I was just sorry because you need to work today, right? Mm-hmm. If the program they exist, give with two people them the exact reasons why they offer in compromise, how it work.
Okay, very good question. So the way it work, we say, number one, even before we submit your application to the IRS, we go first don't run your information through the qualification tool. But the thing where we need to establish with the IRS now, say they go through hardship. And when we say hardship, maybe something happened to you, maybe person don't get cancer, maybe the person business don't shut down, maybe just voila.
Okay, so I need to work. I never work for 2 weeks because I never find job. Mm-hmm. Now, one of the conditions where if you qualify me for the forgiveness program?
No, generally that will not be.
Okay.
That kind of thing no go for. Now, like say, something maybe say don't basically turn that person. You know, say person not just work for 2 weeks, that one, they're temporary. But like say maybe person where they sick, maybe say they hospitalized for an extended period of time. Maybe like person where they run business, but we can't get accident, we can't get disabled. that kind of person in life don't, even though the person they alive, but it just be like saying life don't, I don't want to say bad thing.
Okay.
So then those are the kind of like extenuating circumstances. And even if we still present that thing to the IRS, it still can't depend on the IRS assigned agent to no be like saying that just automatic, then go review then go, as a matter of fact, then go even request for the person assets to see if the person even get asset, if you pay off that debt. Now when they realize, okay, this person no get nada, and this person is now down, like finished.
Okay.
At that point, then go. And even beside the OIC, then still get other things too, like installment agreement, but those ones no be like that. I mean, those ones then just the help. No be like say necessarily like say
we're
they over
limited to that
exactly
that
to that OIC. Yes.
Okay.
Yes.
Great. So we don't talk about because it be good thing for people to understand where they come from. You know, they like say, I just sit for house and no one walk, I don't tired or something. That's some naturally occurring situation where it really prevents you from free generating like some
presidential disaster.
Earthquake can root all your business up. But the fact that I sit for house and no one walk, it is not a natural occurrence a situation where if you qualify me for that.
You not go qualify.
Okay, great. Willingly. So I just want to make, because sometimes when they sit for house, people, they just say, I go do this IRS forgiveness program because say my employer fire me and I don't look for work here and there and not get work. That one,
temporary.
That one, Asia.
Exactly.
It means sorry, they not go. Okay. So maybe we'll take a quick break. When we come back, we're going to talk about some important topic, right?
Yes.
This one, especially now for personal filings them. And when it happen, you go see the reason why this one an important topic. And we talk about deductions. When they go for get employment, how many people then when I want put on top when a deduction, how it work. We go take a quick break. When we come back, you go explain this thing for these people then.
Yes.
We'll come back. Wait. Okay, my people, I want to welcome back. Before we want to take that short break, I'll be telling us we're going to talk about some elephant inside the room when are dependents. When you file taxes, you write something dependents, number of dependents on some form where they call them W4, right?
Yes.
Okay. What to be dependents?
Dependent on any person, we be saying that you provide support for the year.
Okay.
For more than 50% of the support of that person for the year.
So 50 plus 1 support at the end of the year, that person they like your dependent, right?
Yes.
Okay. Some limit there for age for dependent?
Yes. So generally, if person don't reach age 24, generally, except with exception, you no go fit claim them.
Okay.
So then I wear the cutoff day.
Okay. So how about my grandma where it need to do anything? It just come here, old person, 87 years old. It gets every situation, but it need to do anything.
Very good question. And that's why I talk say with exception.
Okay.
Because any person will go there above age 24, will go still be your dependent, has to maybe either be a full-time college student or then disabled. Now, for your parents, then be your dependent. That's why I talk say any person be your dependent, except the general cutoff now age 24, but with exceptions, people above age 24 be your dependents.
Okay. So how about my parents where they come, then after 2-3 years, they start to take some money from government, whether they give us some supplemental income or whatever they call that money, government to give them some check. Afistis use them as dependent?
Yes, perfectly. Especially if them earned income. No, they below some of them standard deduction plus them personal.
Where do we earn income, by the way?
Okay. Earned income now money where we say you actively work to make.
Okay.
Yes.
So you start say if they earn income and standard deduction, continue.
Right. So if the sum of them personal exemption plus then standard deduction, if we exceed 14,600 at that level, then fit file them own tax return where they no fit be your dependent anymore. But if they make below that and then be your parent, yes, you fit.
Okay. What if they make more than that? Make I use my son.
Okay.
What if one of my son them he did above 24? They know they 24, but I make assumption for the purposes of this conversation, right? Say they did 28, then they did graduate school. They did make 18,000, but then more than 50% of that come from me. They make 18,000 working part-time job. Who go for a few years and like dependent?
Yes.
But 50% of that, 51 or 55% of their support, they come from me. A few years I'm like dependent?
Yes. So the fact say your son full-time college student, and I say now you actually provide support for him. Like for instance, maybe he live under your roof for the entire year. Now you they finance him, they give him money, more than 50% of his support for the year. Yes, you fit claim him. And in that type of scenario, he himself, because he make more than that 14,600, go file his own tax return, and you, the parent, go still fit claim him. So now you go file tax returns in two places. But yes, you go fit claim him.
Okay. So what you're talking to say, if my son don't make more than the 14,600, he self go file it on. But me, because I be the parent where they provide 70% for you, I go file for you too, right?
Yes, correct. Because according to the IRS rules, any person who don't make above the sum of impersonal deduction plus his standard deduction, which is 14,600 for 2024, that person is mandated now by force, now obligation. You have to file. If you make below that, below 14,000, if you make like 14,599, you don't need file.
Okay.
Except maybe if you just want to collect your refund on federal taxes, where then we told from your income, which can be optional.
Okay. How about the legal status? I suppose for be illegal, I suppose to get legal status, or the person where I want to use it like dependent, suppose to get legal status before I use it as a dependent?
Very good question. So before anybody can be claimed, that person has to be legal in the US. Any person where they illegal can never ever be claimed.
Okay.
On a tax return.
So I get my fiance, I file for my fiance, make it come meet me for a year. The documents are there for embassy. But I know say I don't tell embassy for Cameroon say now my fiance this he get for come meet me. I file for you, I feel use it like a dependent.
No, because your fiancé go fail the residency test. Okay. So before person go fit be eligible to be claimed on your tax return as a dependent, they have to pass certain tests: relationship test, residency test, support test. It gets so like that person now go fail residency test, so the person no go fit be your dependent.
Okay, but I go change the conversation slightly because say you begin to say if my son makes some kind of money where the standard deduction exceed 14,600 more or less, we be talk right, is supposed to file.
Yes.
Okay, but if that one not some money where he earn, how about one way I think gift my son money?
Yes, you can.
I get any limit for the gift I think give it?
Annually, now 14,600.
Okay.
For you to gift, but for you to gift one person. But if you can't go above that, exception the way we say at that point, any amount above that, you could just put them on form.
What do you mean the exception?
Okay. So the exception I say, if you go above the annual 18,000, let's say you give your son 100,000, the 82,000 above the 100,000, you just nobody say you go pay taxes on them. You go just now need to let the IRS know. So you don't give your son above the annual 18,000, then that extra, the IRS go come apply them against something where they call estate tax.
Okay. So that 18,000 where you say, make we just say 17,000. Because I be earn them like income, I give them like gift. I go report them?
No.
Okay.
If we below the 18, you don't need to file the form 709, the gift tax.
Okay, great. So people that want the year now say if you think gift we get some criteria where you're supposed to gift on only a direct kids or sibling or any condition there. If you gift any person on the street that amount?
Yes, you feel gift and annually and not basically not for each person. So you feel gift anybody. But that even that 18,000 limit, not just for each year. Next year, you feel gift another 18,000 to as many people where you want gift.
Okay, so now the cap na 18,000
annually.
Mm-hmm. So I feel gift 4 or 3 different people them up to the 18,000.
Yes, and to also let you know, then the increase them every year.
Okay.
So next year now it will be 19.
Okay, good. So you know the less if we give 6 different people then each year 18. So the total, so if we give 18 for one person, 18 for another person, so one person
Yes.
na 18.
Yes.
How many people then if we give the 18 to for a year?
You feed as many people
as many people as I get. So if I be trillionaire, if I even get 10,000 people, then 18,000. Okay, good. All right, in a good thing for no. So the other one where I want to ask you now, we don't talk about these normal people then whether they work for companies. But now we could go for individuals and when these contractors and right, these 1099 people them. Some common thing the people that they file now say this one na my house na my office. They feel use house like office.
Yes. So when you say house like office, how do you mean?
You know some people they say they get house.
Yes.
Right? Now independent contractors them. Right?
Oh, okay.
Now I'm saying some nurse or accountant or somebody.
Yes.
He get for a apartment. But you know want go rent some place for they just say room A na office. It be allowed?
Yes, it is allowed. So just to explain that to you, it is allowed if you be business owner, maybe say you be self-employed.
Yes.
But if you say maybe you they work for somebody as an employee, you know go fit claim them. In the past, we used to be able to do that, but not under the current tax law.
Okay, great.
So you know they allowed.
So the fee use apartment, some condition they get for meat, they get for get the house with table, chair, computers, or now just you just make some deduction and say, okay, this I get suite 108 na my office or my kitchen na my office.
No, you know just free use anywhere. So number one, that place has gas to date specifically designated. We've saying that exclusively now for office owner they use them. And like I said, the person will go free claim this deduction has to be self-employed. If you be employee, no.
Okay.
Then also rating come say the method where they generally they use. Now method where we say we go measure the specific area where the person they use exclusively for office, can divide them based on the entire square footage of the entire house. Right. And then maybe you have to be paying rent or mortgage for that particular location. So we go come prorate the section, the amount, the square footage area where they use exclusively for office to multiply the expenses.
Okay, great. Because I go ask you a couple of other questions. People that usually do this, right? Especially the independent contractors, they go tell you, say, I drive motor, I fix my car, my insurance, all those things. They use them like deduction. The fact say they drive 2,000 miles this month. The fact say they fix their motor, the insurance. They use that one as deduction.
Yes. So independent contractors, those are people where they collect 1099.
Yes.
Then we claim everything.
Okay.
Yes.
All right. So the other, before we move to this corporate thing, right? I want to ask you some question where it be very pertinent. Generally, we get some things now where people them for outside, right? Me, I be either a 1099 independent contractor or I be an employee. When December, because December they come they around the corner, very soon people they go start get their W2 or they will get their 1099. Then they go meet people them for outside. Now you see a bit common people that see something say when they go they meet these people them. They say self-prepared. What do you be self-prepared?
Self-prepared means saying now you will be the taxpayer. Use your own and prepare your own tax return.
But me, I can meet up some persons. The person say, if you help me prepare my taxes. But at the end, at the bottom, I see self-prepared. What did that one mean?
That one a manipulation.
What be manipulation? What be the manipulation in this one?
The manipulation I say na misrepresentation because if person prepare your tax return for you, that person supposed to put in name, is supposed to put in signature, is supposed to put something called PIN, preparer tax identification number, and even supposed to give you a copy of the tax return. So that's why I talk say number one, na misrepresentation and manipulation, because that person supposed to provide you all of that information on the tax return.
So when we get situation where somebody prepare your tax, then they put at the bottom, they say self-prepared. It means that the person will prepare your tax, they tell you, say, now you prepare the tax, not be ye. So if anything happen, now the liability then are on you, the person, not be ye, the person will prepare the tax, now where the travel tell we.
Perfectly. And the danger we even did that thing, we say, this thing don't, I don't see where this thing don't happen. We say, some people then go carry them tax return, go meet preparer. At the end of the day, maybe the tax preparer go call the person where the tax preparer go call the person where be the taxpayer, the owner of the tax return, tell them, say, your tax refund na 4,000. Now the danger where there be this. But the tax preparer, the actual refund na 10,000. But on this office, he tell the owner of the tax return saying tax prepared in refund na 4,000. Behind the scene, the tax return when he submit give the IRS na 10,000 refund. So the other 6,000, he don't divert and go in your own bank account. So at the end of the day, maybe after about 3 years, because the IRS they behind, when they can go audit that person tax return because of the nonsense where the tax preparer put on the tax return, then go come begin they send the taxpayer, the owner of the tax return, notices say. Then audit in tax return, make it come pay maybe 12,000 back to the IRS. But because them put self-prepared on the tax return, IRS no sabi say, now somebody prepared that tax return. IRS thinks say now the taxpayer himself going go the owner prepare, then go come they hold that person for neck.
Okay.
Come hold them, collect 12,000 for him.
All right, maybe we take, you don't talk something where it make people them inside studio, they sweat. I try. Me, I normally sweat, but I try and no sweat. It means it ain't bad. If you see that people they producers them and everybody behind camera, I don't see someone they say when a young boy they don't get bald head after you don't talk this question, I'll answer this question. We go take break. Maybe we will tell them wait for use for prevent the bald head, make him join with group. We will come back. Then you go continue the conversation from there. Will they come? All right, my people, I want to welcome back. We don't address this issue for self-prepared. And like I'll be telling you before we take this short break, studio be shake a little bit. So we don't come back now. I'll go ask some question for Stephen, right? This issue for this self-prepared. Before we get into the next phase, some things that they call on Sarbanes-Oxley. What to be Sarbanes-Oxley?
Okay, so Sarbanes
briefly.
So Sarbanes-Oxley now, when the AICPA now the
what to be AICPA?
AICPA now the organization where they oversee chartered accountants for America. So they won't begin they hold CFOs, which are the chief financial officer. Now them be the Baba accountant. Now them be the Baba CPA for any organization. Then when they hold them responsible for any financial statement where any company they prepare. Because I know say if they hold the highest accountant in any organization for neck, instead go they hold all the people where they behind them responsible too. So that is done the whole idea of Sarbanes-Oxley to make sure that audit firms are doing their work, are performing audits efficiently, and that the CFOs too are held liable.
Okay, and even the chief executive of the company too is to be responsible for anything where not be CFO. Only go sign both the CFO and
the CEO. Yes.
And the CEO.
Yes.
They both be accountable for any accounting thing where they put their pen there, right?
The financial statement.
The
right.
financial
Where
statement. So even if apply to taxes also
yes.
as an individual?
Yes.
Okay, so it go back to the question where you be answered earlier. Say when they put self-prepared, maybe in an indirect way where this quote-unquote CFO, when not really CFO, not just some tax preparer, it don't push the thing back for you, right?
Yes.
Say, hey, now you be, so the liability then away there with the tax preparer or with you, the taxpayer?
It there on both.
Okay, but I put self-prepared, how the liability will be for me, where I just said, no, now you prepare the tax, how the liability go hold me?
Oh, okay. So if we talk about personal tax return.
Yes, we talk personal tax return.
Okay, yes. Once the tax preparer don't go put self-prepared on it, where you no disclose any of your own personal information on the tax return where you carry give the individual taxpayer, the tax preparer don't come out to now the taxpayer himself, the owner of the tax return, na him gongo con de kasala.
Okay. So when I see self-prepared for your tax form, take and go back for the person where he put self-prepared. Say, no. May he put and say, now he prepare them. I prepared. Me, you the preparer. May he put the name there, right?
Yes, and his signature and the pitting.
Okay.
Pitting, that one can be very, very important.
All right.
Preparer tax identification number.
Okay. So how long you feel defer? How long, make I ask you the question, how long person feel defer for file taxes?
It's even totally unadvisable to defer.
So what if I get some situation where it prevent, I must file taxes every year?
Ideally, yes.
Okay.
But
how about the non-ideally? I get some time when a grace where the fee say, you know what, after some time you file?
Yes. So if you're supposed to get refund, if you no file within 3 years, you go lose your refund.
No, I need to talk about refund. But we talk as me, I'm supposed to file every year. If I don't file every year, they go come follow me that year?
Yes, you're supposed to file every year, but they're not going to come after you immediately.
Okay.
Then we give you about 4 or 5 years grace.
Okay. All right. Then make you go now for the one where you can try for talk, which is the issue. Say if I get some time period where if I get refund, if government supposed to give me money back, now we call refund, right?
Yes.
Okay. If I no file and I'm supposed to get refund, sometime the way after if I no file that money na waste, government would just take them back?
Yes, very good question. So normally not 3 years. If you're supposed to get a refund and if you no file, your money go work after 3 years.
So what you talking to say, initially we say, if you no file, government go to look you back. If government even know say they're supposed to owe you, you no file, you mean say they go glad. Now you try for talk, say government go glad.
Yes.
Okay, because they go just chop the money.
Then we just chop the money.
How about the flip side? Where, oh, no. Me, I'm supposed to owe government.
Yes.
There are no file.
Yes. So if you're supposed
to... So limit the way, after 4 years, 10 years, I no file, government would just say, you know what, they go forfeit the money.
Yes. So if you're supposed to file tax return and if you don't file, and maybe say you owe the government, the government will pursue you for 10 years on any tax where you owe. And if you no file, and where the government knows, say, based on your income and all of your documents where they don't receive, they realize, say, you actually owe. Then go come file something for you, then they call them like default tax. Where they say they no go put any deduction inside. They no go claim any of your own expenses for you. Then go just send you a deduction-less tax return. Like they are sending you a bill. And then go pursue you for 10 years. Now tell you, even the state will pursue you forever. If you owe the state, then we pursue you forever.
So IRS get statute of limitation 10 years.
IRS get 10 years statute of limitation. But state, then we pursue you forever.
If you owe state, unless you go back for Cameroon.
Exactly.
Now the only way that way you go stay off their back.
Then
they no
pursue
get
you
end.
Forever. Yes.
Okay. All right. How about audit? Sometimes there's some limit the way I feel say, you know what, and I be filed my wrong taxes on 1998, 2000. Sometimes the way I feel say, you know what, I am free. They no go ever audit me. How many years?
So if not fraud.
No, I don't talk fraud. I file taxes, right? I do worry about audit.
Yes.
Sometimes the way IRS know the audit, they get limitation for audit, statute there for limit for audit.
Generally, statute no go there.
Okay.
Especially because normally audit is perceived as fraud, really. Okay. So then fit come after anybody for fraud.
All right.
Anytime.
So that one, even at 200 years, if I get if I live up to 200 years, the fee still come behind.
Yes.
Say, you know what, we go audit you. You will owe us money for 1642. Today we want pursue you criminally.
Yes. Okay. Now, but this is the interesting thing. I normally notice, but this is not just from experience. One thing that we at the CP say, most people, they know they audit them past 3 years. Like if you see anybody where they audit 2024 tax return, then go audit 2023, 2022, usually not like 3 years. But if not fraud, then we go after anybody. Uh-huh. But not 3 years, normally they see.
Okay. So again, when I continue, I know someone that watch me carefully and keenly, because this one a very interesting conversation. When I not forget for follow we, share, invite una important people them, make the watch we, share with content with the rest of una important people them. And we'll come toward the end of the show. One question though I want to ask you, because business people then they get on one particular thing with this, they usually sometimes they underestimate them, and they call them some Obamacare mandate. So some cut-off number there for employees who are supposed to get where you file, and where to be that cut-off number.
The cut-off number are 50 employees.
So you get 50.
Yes.
Any kind of employees or?
Now full-time. So the way it works now, say now full-time employees. And the moment when you don't get above 50
what to be full-time employee? Full-time
employee now person will say work over 2,080 hours in a year. Where say that means say if you look at there are 52 weeks day 1 year and 40 hours day per week.
Okay.
So
might work 40 hours every
week of the year, every work week of the year for 52 weeks in the year. So then at the 2,080 hours.
Okay.
And the Obamacare thing, the way they work now, say, then they consider, the moment when you don't get above 50 employees, now then they consider that employer an ALE, applicable large employer. So that's how the Obama thing they work.
So some penalties there if you not file the Obamacare thing?
Oh yes, plenty penalty. Then go charge civil penalty just for all the missed forms, the missed deadline for filing Form 1095C.
Mm-hmm. Okay, so would it come toward? We don't come toward the end. We don't come for the end of the program, and a very interesting conversation, very useful information from Stephen, and we don't talk about personal filing, audits, and deductions, and business, and all of that stuff, and how we feel. Because this one information for get ourselves in order and for stay away from trouble. Because, like one thing there they talk, so one guarantee, what to be the one guarantee for this one?
Death and taxes.
One guarantee now, Shane?
Death and taxes.
Oh, you don't give two. One may give one.
Taxes.
Okay, taxes. I say one guarantee, you give me two. One guarantee inside this America, not tax.
Not taxes.
We go up, we go come down, we go left, we go right. One thing they will not go dodge them now.
Taxes.
Okay. So we hope that we will find this conversation helpful. How people they feel reach you, Stephen?
Very good question. So the name of our CPA firm is called Stephen and Associates CPA PC. We're based for Washington, D.C. Our address now 700 12th Street, Northwest Street, 700, Washington, D.C., zip code 20005. The phone number is 202-315-6324. And the website is www.stephen, and that's STEPHEN, CPA, which is C for Charlie, P for Paul, A for Apple, and then CMA, which is CPA CMA. And the CMA is C for Charlie, M for Mary, A for Apple.com.
Okay. So Stephen and Associates CPA CMA .com. We don't come for the end of the show today. We want to thank you for giving with people them very useful information.
Thank you.
My viewers, until next time. Bye-bye.